Hello, this is Jeremy North with your educational and economic update for January of 2023. Well, in this month's video, I'll discuss major headlines that influenced markets in December and the entire year of 2022, along with economic and market events that we are looking at to influence January and the rest of 2023. Please stay tuned at the end of the video for the required disclosure statement. Well, in December, the U.S. stock market gave back all of November's gains and then some. As the S&P fell 5.9%, the NASDAQ lost more than double what it gained in November, down 9.2%. And the aggregate bond index was down 1.3% for the month of December. Overall, for the year, stock markets had their worst year since 2008, with the S&P down almost 20%, the NASDAQ almost 33%, and the long-term treasury bonds almost down 33% as well. The aggregate bond index lost over 14% for the year, making this the worst U.S. Treasury market's performance since 1801. The 1- and 2-year bonds are still yielding more than intermediate and longer-term bonds, holding the yield curve's inverted position. As mentioned last month, this inversion has long been a predictable bellwether for an economic recession. The typical Wall Street balanced account with 60% in stocks and 40% in bonds, known as the 60-40, had a dismal year, the worst since 1937. Tactical strategies utilizing typical strategies such as moving government bonds when equity markets gave a sell signal also had a poor performance as well, since they moved from stock market losses to almost even more losses in bonds after they moved. With inflation showing some signs of slowing, the Fed, in its fight to tame inflation, increased rates in December by just a 0.5 percentage point instead of their typical 0.75 percentage point from the past few meetings, which is now to a range of around 4.25 to 4.5%. Jerome Powell, the chief of the Fed, said that they will continue to raise rates, possibly going above 5% this year. According to Bloomberg, inflation expectations this year have slightly dropped since March of 2022. This is some indication that the market thinks the Fed may hold down long-term inflation. If this holds true, the hope is that the Fed will ease the size of future rate increases and then curtail them altogether. Many economists believe that markets will continue to be volatile, as bear markets usually are, until the rate increases have ceased. The million-dollar question now is, if the Feds take the future rate increases too far and cause a deep recession, or if they will take their foot off the pedal and allow the economy to have a soft landing that is hoped for. With all this uncertainty and environment, caution is, of course, urged. However, keep in mind that markets tend to recover prior to the end of a recession. They also lead on the way down, as we have seen in 2022, with markets way down and the economy still very strong. We are keeping an eye on all these factors in order to take advantage of an upturn when it arrives. 2022 showed just how important a truly well-diversified investment plan is. Not one that is just 60-40 equities and bonds. That is why most of our clients' overall portfolio includes a percentage of assets protected from the market at different levels based on the client's risk assessment and preference. If this is something you want to discuss or learn more about, please give us a call or email me at jnorth@360ira.com. Remember that we are here to help. As always, we are diligently assessing the economic and political implications for your portfolio. Should you have any questions or concerns, or you would like to discuss your personal situation, please give us a call. With all that being said, here's the disclosure I am required to read. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. Thanks again. Jeremy North signing off for the month of January 2023. I hope you have a wonderful month. Stay warm and have a wonderful and blessed 2023. Take care.